Hello and welcome to PQ Pramam Hiral Tadia. Joining us on the show today is Mr. Parvat Srinivas Reddy, MD at MTAR Technologies, joining in. Welcome to the show, Mr. Reddy, and a pleasure to speak to you as always.
Good afternoon. Thank you.
Mr. Reddy, firstly, let me congratulate you for a strong set of numbers that we've seen, the kind of growth that has come in on a sequential basis as well. Firstly, what has led to this kind of performance from a top line and bottom line perspective? And what has led to the contraction with regards to margins, if you have to see on a sequential basis?
The first thing is the growth is primarily coming from the clean energy segment, which we are doing very well. And we're adding a lot more customers under the same segment as well in different categories in wind, hydel, waste to energy, apart from fuel cell technology that we are excelling right now very well. Now, as far as the margins are concerned, it is not a reduction in margins. What we have done is in the last quarter, we had to take a very conscious decision to do market correction across the board for all the employees in terms of their salaries, keeping our future growth in mind over the next 5 years. And this has been done on a one-time basis. And that's the reason why you can see a lower 300 basis points, lower EBITDA margin for Q4. But overall for the year, we are still retained a margin of 27%. We are down by 1.5% purely because of this reason. Otherwise, we would have achieved the same margins what we had promised to the markets.
So overall, if you see the third quarter as well, in the third quarter, the margins were under pressure, but that was mainly on the back of high share of clean energy, which kept the gross margins under check. How is that phenomena also panning out now?
No, moving forward, we'll have the other sectors also in terms of absolute numbers growing up quarter-on-quarter basis, because we have done a lot of work in terms of the work in progress that we have done over the last 1 year in terms of the domestic orders, either with space or in terms of semi-cryo engines, in the case of nuclear, in the case of fueling mission heads. So we have built a lot of projects which will get delivered this year. So there will be a lot of increase in absolute numbers in terms of the domestic segment in space and nuclear segments as well. So we have a lot higher gross margins there. So we'll be able to not only achieve the margins that we have set at 28% EBITDA margins plus minus 50 basis points, 100 basis points. And also in terms of revenues, we said we'll do about 45 to 50% revenue growth from last year to the current financial year.
Right. And overall, if you see in terms of the export side of the business, has it been extremely weak, or this was something which you had expected already?
Well, we are doing very well in exports. We have done more than 70% in our last quarter. And we'll continue to build our export business more and more. It's more on the volume basis, technology, a lot of technologies involved there. That's why we are qualified with a number of customers right now. Even in the aerospace sector as well, apart from clean energy. So that number will keep doing pretty well even moving forward.
Right. And from a geographical mix, how is that looking like?
We primarily cater to the US-based companies in most of our areas. And some of the exports are also being done to Israel. And we are slowly trying to move into Europe. But most of these high technology areas, fuel cell and aerospace, are primarily to the United States.
Right. What's the order book looking like at the end of the year now?
We have an order book closure of 1175 or 73 or something like that by end of the year, which we said will be close to 1200 crores when we met last time during Q3 earnings call. And moving forward, we're expecting sizable orders coming in, close to about 1,200 crores of new orders will come into the system in the current financial year. And with the kind of growth what we're looking at an order book closure of approximately around 1,500 crores.
Right. Right. And if you look at 24 as a year, what will these orders translate into in terms of revenues? What's going to be the breakup looking like?
It will be close to 50-55% in terms of clean energy, and that's what I said. The other sectors are also catching up. So we're looking at about 40% and odd coming from the other sectors as well in domestic markets, because we have built a platform for that now, and we are we are improving our numbers in terms of absolute numbers out there.
Okay. And overall, if you see in terms of the long-term structural growth, the way we are looking at it in terms of business, what is the capex plan looking like? How are we ramping up our capacity as well?
We have enough capacities. We already established our new facilities near the airport, which one of the facilities will get functional by end of June. And we have enough capacity to cater to various customers. As of now, that's not an issue, except for a few bottleneck areas. But we're also looking at energy storage systems with various customers right now. And if that comes into play in this quarter or next quarter, then we might have to establish the facilities for them as well. But that's going to be a huge volume business for MTAR, which will definitely happen. So we need to assess the requirements at that point of time and take it forward.
Right. And any impact do you see on the back of geopolitical concerns in Europe as well as the interest rate rise in the US? Is that something which could probably a potential threat?
Not really. Probably, I should not be saying this, but a lot more dependency is coming onto India. Not only manufacturing, but we also need to develop a lot of technology in this country. So obviously, our R&D is working on various things right now. So it will be more of a positive for MTAR to add a lot more customers and requirements for them, because a lot of European companies who are not able to manufacture in Europe because of high power costs and labor costs are now slowly coming back to India, and also they're trying to slowly move away from China. So let's see how that spans out.
Right. Apart from that, Mr. Reddy, we are seeing an improvement in the working capital cycle as well, right? So overall, what is it expected to look like at the end of FY23? Because clearly the collection cycle is improving. The net working capital cycle has declined as well.
So it will improve further. See, we are taking a lot of steps in that area. The earlier during COVID and all, now obviously COVID is a history right now, but we were impacted by that quite a bit. So we had to hold a lot more inventories than what we should be holding. So things have eased out in terms of shipping line concerns of late. So we might be moving forward in terms of reducing our inventory levels as well over the next 2-3 quarters. So by end of FY24, we're looking at 230 right now, but we might drop below 200. And that's how I think we should move in that direction. And we are completely focused on that right now.
Right. So would it be right to say that if you have to look at FY24 with the way the order book is currently, it could probably be looking at a translation of almost a 50% sales growth in FY24 and almost say 45 to 50% CAGR in sales from 22 to 25 onwards, that kind of a period. Is that a good way to look at it?
Absolutely is.
Right. And in terms of the inordinate delays that could come in order placements and the technology shift, from the SOFC based fuel cells, how big a risk is that to business?
It's not really a risk. If you look at, we're dealing with Bloom Energy, for example, one of our customers. Now, they are the leaders in the world in SOFC technology, and recently also they have proven their electrolyzers very well in the last 1 week or so. So the electrolyzers what we have supplied for production of hydrogen, that's working with very high efficiency. So we are looking at a lot more progressive growth in that area with a specific customer like Bloom. But other customers where we are in discussions are yet to build their prototypes and really ramp up to the volume where MTAR can serve them. So we are looking at those areas also in fuel cell. So I don't see this as a concern. It's more on the, as you have seen, we have really widened our customer basket of customers right now, trying to do a lot more first articles, trying to improve the volumes there as well. So we are spreading our customer base in a big way over the next 2-3 years, and we have shown that even in this quarter as well, the kind of customers that we have added. So in the long run, I don't think that's an issue at all.
Right. And when you talk about the other segments as well, now we are already developing SSLV capabilities for ISRO. How is that part of the business looking like? What stage are we in now?
We have started our design work. We are in advanced stage, but see, look, that's a 4 years program. So target is at the end of 4th year, we have to launch our first developmental vehicle, being a private company, and fully integrated system, small satellite launch vehicle. That's going to be a game changer for MTAR. And we have also recruited eminent scientists who are working on this, more than 10 of them. And that's something which we are really upbeat about. And it will take time because a lot of technology is involved in that, and we are pretty confident of it. One advantage we have is we have the capabilities of manufacturing it, and also we work with ISRO earlier on various design aspects, collaborating with them. So it becomes a lot more easier for us to ensure that, but there is a definite gestation period for manufacturing, design, and all this stuff. So at the end of 4th year, we are pretty sure we are on target there. We have annual targets in terms of work completion areas, and we are adhering to that, and we'll complete that developmental flight by end of 4th year.
Right. And apart from that, with regards to where execution in the nuclear segment goes, that was slightly slow in the previous quarter, and that was mainly on the back of the delays that we saw in certifications and certain long cycle items in the pipeline. Where are we on that? Because the expectation was a chunky revenue to come in from there, specifically from the fuel machine heads and the cooling channels, and then the ramp up happening in the nuclear segment, right? So how is that side of the business then panning out? At what stage are we?
The fueling machine head, we have already dispatched one head in March quarter, and there are 6 of them, so we're planning to dispatch those in the current financial. We are right on track with that, and we already have everything in place. Now the assemblies are going on, so we have done all the missioning and various other requirements, certifications, everything is completed. So we'll see those numbers kicking in this year. That's what I was telling about the numbers improving in domestic. And even coolant channel assemblies, we're going to close those orders by September itself. So all these areas, we are very clear about it, and we are in advanced stage. And the new orders, what we have received from nuclear for 130 crores and odd, we have started sourcing the raw material for that, started working on the manufacturing plants. We have started our work on that. So there will be some progress on those orders as well. There are 3 years, 10-year projects, but we'll try to complete them ahead of time. Apart from that, we are expecting a good order inflow from the nuclear segment moving forward in the financial year as well. So it's looking pretty set for this year as far as the numbers in nuclear are concerned.
Right. So I think all across, I think apart from the clean energy segment, the other segments will also start firing. And it's going to be an interesting year to watch out for the company as well as the investors. Thank you, Mr. Reddy, so much for joining us on the show and giving us those views. And clearly, overall, if you see in terms of the company as well, a lot of potential that investors have been watching out for. Thank you. Stay safe and speak to you soon again.
Thank you. Thank you so much.
थैंक्स चलो अभी 3 बजे SBI है ना